What's up, guys? If you didn't know, Tom and I just recently held a very important webinar called How to Think Like a Winning Trader. There's a link in the description where you can go and watch the replay totally for free. The content in that webinar is not going to be found on YouTube, so make sure you go check that out. Now, for today's video, Tom and I are going to go over a big trade that he took to pass phase one on his second 200K challenge. He's up 8% in his first 3 or 4 weeks of trading full time. So there's a lot to learn from Tom. So put your phone away, get off Facebook, close your trading terminal, and enjoy today's video. Welcome back, everybody. We've got another amazing video for you today. So I wanted to bring Tom in and discuss a recent trade that he took to help him pass phase one on his second. It's a 200K challenge, right, Tom?
It is, yeah. 200K.
Second 200K challenge. The way that you managed this trade, I think, is where people are going to find the most value in today's video. So I really want to go over, of course, the entire daily report card and everything like that, Tom, but I want to focus in on the risk management because that's really where, when people try to get funded after they go through the quick trials and tribulations, maybe the first couple of times, they realize that the position sizing, the risk management is so important. And you and I have been doing a lot of work to try to really systematize this process. So how much do you think that the focus on risk management and how we're really trying to tweak it so it works well to help you pass the funding challenges, how much did that prep that we've been doing and all that study that we've been doing play into this trade before we even get into the charts?
A lot. I think a lot. As you know, we know we're working together daily at the minute. And I, within the month of May, have been challenging myself to look at my risk management rules based on some of the trades that we've been taking, some of the work that we've been doing. I think you know that I'm in a little bit of a dilemma on how I've been managing my trades. How can I extract more profit from my trades? And this was the first trade where I have tried something a little bit different from what we've done, and it has paid off on this trade, and it's allowed me to pass phase one of the 200K and also allowed me to bank some more profits or bigger profits than I have been when trades have been running in my direction. So it was a really interesting trade to study for me, and I think it's been born out of all of the daily report cards that I've been doing. And for those of you that have been on ASFX and watching me on ASFX with the market recaps, you will know that I've been studying and trying to find ways to hold winning trades for longer. So this just feeds off the stuff that I've been talking about on ASFX TV as well.
Love that. With the focus now on trying to maximize these gains, how important is the review process? I mean, people are going to be looking at this video and they're going to see all the detail that you go into here, and they're going to really try to, I think, add a lot to their own trading because most people aren't doing this. So how important is doing this overall daily report card? How important is that to you in order to continue to improve, I guess, just like it says at the top here?
I put a lot of my success down to my journaling. I feel it allows me to self-reflect on my performance, but it is that continuous improvement. It forces me to look at ways that I can improve my trading. And I think the two really important bits for me in the month of May have been the higher time frame sentiment, where I go through all of the higher time frames and I'm trying to find alignment between the daily, the 4 hour, the 1 hour, and then the 15 when I'm taking my trades. But then also a little bit later, I ask myself a really important question, and it's what could I have done to make more or lose less? And on every trade that I've taken, I've gone through and asked that question, and it's really forcing me to deep dive into my trades and my performance on how I can maximize my winners or cut my losses short. So I think that has been the biggest part in this process for me.
I love that. So I think everybody listening can take one thing already is just asking themselves that question. What could I have done to make more or lose less, like you did right here? So implementing that into the daily report card should be a must for everybody, you know. Now, to back up a little bit, let's start at the top with the, you know, the overall sentiment, the watch list. How did you get to this trade today? This was GU or GCAD? What was the symbol here?
So this was GCAD,
Okay.
and I remember it well. I was on ASFX TV at the time. And before I even started the day,
Yeah.
I have a morning routine which I go through before I get to the desk, before I open any chat rooms, any social media, whatever it may be. I go through my morning routine and I build my watch list in private. And that starts off with the higher time frame sentiment on the left-hand side. And I can only trade, or I've only been trading where we've got the daily 4 hour and 1 hour, 8 and 21 EMAs in the direction of my trade. So you'll see here, this is the daily. So this is so I've just put some notes on here. You can see that we were very bearish. We're in a full trend. And then I'm just writing some extra notes on what I'm seeing. So you can see here that we've been in a bit of a consolidation, really. You can see on the 18th of May, I think it is, we had a really big candle and we've just been sort of moving to the side of that from there. But we break above the 21, and then the Monday before, you can see that candle there, the bearish candle there, we open above the 21 and close below the 8. And that's the day before I take my trade.
It's a great time to be looking for shorts. So then you take it down to the 4 hour, and now you're looking for, is your entry coming right here where current price is, or is the entry happening somewhere back here? Like, is this
so my entry happens on about where your cursor is now, at the start of that candle.
Got it. Okay, perfect. So this is right at entry. This photo is taken at entry.
So yeah, pretty much a little bit of, after the trade completed, after I was out of the trade.
Sure. But I get what you're saying. Yeah. Okay, beautiful. So now you're using these channels a lot more too. And are you finding success with them because you're seeing the break of the structure here to the downside following the overall bias from the higher time frame?
I am using them a lot more. And I think it's just because I've noticed, I think within the last month, that I see things better and more when I put these visuals on. And I think this stemmed from a conversation that me and you had again in the Black Shirt Club, where we were talking about horizontal levels, and I couldn't quite pick them up as well as you do. So I started to draw them on. And then as we've progressed and you've you've pushed us or tried to improve our performance by playbooking trades, I've just started putting lines on where they make sense to me. And I've just seen things like this repeating again. If you follow me on ASFX TV and you watch my market recaps or my live trading, all of this will make a lot more sense.
Yeah, no, it still makes sense. I mean, this is basic structure here. What do you do with the market sentiment line being in the buy zone there? Does that not turn you off from shorts today?
Yeah, so this is the 4 hour. And I'm taking my entries on the 15-minute and the 1 minute. So market sentiment for the day is coming from the 15-minute, and then I'm taking my entries and managing it on the 1 minute. So I understand that I'm probably not going to get L50s in the completely right zone every time, but the daily was in the right zone, the 1 hour was in the right zone, 15-minute was in the right zone, and the 1 minute was in the right zone.
Yeah, so the 1 hour is very bearish coming out of that channel here. You can see the pink line extended from the 4 hour chart. Very bearish coming out of there. 1 minute or 1 hour L50 is very bearish as well. And then to the 15-minute L50 is very bearish. And then here, I love the structure that you have drawn from yesterday's low. It's beautiful, right? The break, retest, and then you're trading the move off of it. You have the divergence drawn with that pink line as a good take profit level. I mean, with a perfect L50 and with that much higher time frame alignment, were you not looking for ADR on this trade, or how did you manage? I guess we should jump into that now so we can see where the entry is on the 15-minute, and I can pull up the 1 minute, but talk to me about the management as well.
So I knew where I was on my challenge account. So phase one evaluation, right. I was not looking for ADR on this. I was just looking to get over that 8% mark,
which is right here.
So as soon as that was reached, I was closing the trade and banking that profit.
Which brings up that conversation about like trading properly and then trading to pass a challenge, you know?
Oh, they're completely different. I've done sort of a few challenges now, and yeah, they have to be approached differently, I believe.
And I think one of the big things that we're learning is you don't want to lose, and you want to try to maximize gains. Like I had a call with one of the Black Shirt Club guys, Kendall, this morning, and we were talking about like really what James's success has been, because everyone's talking about his big payout. His success recently has just been bagging those trades, 1R, 1.5R, 2R, most of the profit comes out. But then when you get closer to the end of it, starting to look at some of the trades like I did to pass my recent one and how you did here with this one, looking at it and saying, how much do I need to maximize here? Because if you remember on my recent 200K challenge, I passed phase one by adding into that Euro USD trade. And I added in just enough that I knew if I went to low of day, I would pass, so you do want to then start to look at some of the math behind it too, which in real proper trading, once you're funded and trying to preserve capital, that's not as important. You should really be just managing risk and mitigating risk and trying to preserve capital. Where here, you're trying to slam it for the gains. But I think it makes sense to try to approach it with this. So how much risk did you put on this trade?
So I had 1% risk on this trade, and that's my max risk. That's the most I would allow myself to risk.
Okay.
And for me, the reasons why I risked 1% on this is because I felt this was pretty much an A setup. The only knock I had against this trade was the divergence, which was not from an oversold position, and I had 3R to that divergence. Other than that, everything else was really good. I really liked the higher time frame alignment, the fact that we were coming off yesterday's low.
It's beautiful.
So pretty much everything is saying this is bearish. The only thing is that divergence. But again, divergence signals that there's trend. And if I could get to the low of that divergence, I knew I'd pass the challenge.
Right.
So I was, at the time, again, I was on ASFX TV and GA was setting up at exactly the same time. But GA had 1R to divergence low and low of day, whereas this had 3R.
There it is.
So GA I could have taken on stream live, but I passed because of the poor risk reward. And if you go and watch the replay of that, you'll hear me say that live, that the risk reward kept me out, and I was going to be more patient and wait for something on GCAD because I knew I potentially would have better risk reward. And I got rewarded with that patience with this GCAD trade.
Exactly. Well said. And I think the way that you show the divergence here on the 1 minute, highlighting the D1 entry, we should, talk about that too, because this is something we teach in one of our courses. And I think that the D1 entry has led to a lot of your success. You have been much better with the D1. I mean, other than the A2, the D1 is your go-to. This is an entry where when you see that divergence with lower highs set in, market sentiments in the sell zone, you can look for risk there because of what we teach in the course. And look at how well that market sentiment line holds, that 1 minute L50 holds the sell zone for your entry. Just clean for 2-3 hours,
Yeah. And that's with part of that risk management and the change in the risk management. Again, as I've been going over and studying all of my past trades, nothing was telling me to exit the trade on the 15 minute or the 1 minute. Right. L50 stayed in the buy zone, as you've just mentioned, on the 1 minute. So you can see there that it stayed in there for hours. Sell zone. Yeah, right. So and then as a D1, we take 50 EMA retests. So that's the big EMA that we're looking at on the 1 minute, is the 50 EMA. Now, as we drop down, we don't ever break above that 50 EMA to my take profit.
Never.
We pin it once, and then we just, and then we hold everything. So everything is saying, stay in this trade. The 15 minute, we're outside the 8 EMA. So I was happy it was tough. It's the first time I've managed to hold pretty much a trade to 3R without ever taking anything off.
Yeah.
It was very nerve-wracking, but it just goes to show that you've got to trust price.
Yeah. Trust price, but also challenge yourself. So when you asked yourself the question, what could I have done to make more or lose less? What was your answer here?
So I said, if this wasn't the special scenario because it was taking me over that phase one mark, I could have let this trade run. And if I was trailing my stop, because I was really conscious that risk reward is a dynamic thing. And as I was moving in profit, I was then, when I was up, say 2R, I was then potentially risking 3R to make one more. So I was really conscious of that. So I was trailing my stop above the last 15-minute candle high. And if I was to let this trade run and I didn't need to bank any profits, if I continued to do that, price would have hit ADR and gone 6R or 5. I think it might have been about 4 or 5R, in which case I could have then taken it off at ADR. So that's how I would maximize profit next time around.
Love that. Love that. Now, when you go down to the bottom of your daily report card, why don't you kind of just highlight this for everybody? Because I think this process and routine checklist has also made a big difference in your review process as you've progressed in your analytical journaling side of your own performance. Wouldn't you agree?
Yeah. So I think one of the main things that I was focusing on in May, having this would be my first month full time, I wanted to really put an emphasis on my process. And I've just had a bit of like this, I call it my habit tracker, to just make sure that I'm doing everything that I can on and off the charts to make my performance as good as I think it can be to start with.
Sure. So off the charts, I notice here that I exercised is not checked. So how important is this part here where it's like going to sleep at the right time, reading, meditation? How much is that important versus the trading errors? Because very clearly you didn't make many trading errors on this one, but it seems like there's more of a mixed bag of results here. So what, do you give yourself any of a hard time when you don't make the cut here?
So I think at the minute I'm definitely still in the data collection phase, I'd say. Okay. I definitely say, I think for me, the one thing I have noticed is if I stop at the charts for too long, and I'm going to add one in there that says, did you take a break mid-session? Because obviously I'm on at start of London and then I'm on to the US session. I know now that through the last month, I know I need to be taking a break midday. So that is something that stuck out to me. But I've not noticed any specific pattern yet.
Okay. But it is good to collect the data still.
Absolutely. Yeah,
absolutely. Okay, beautiful. So I'm really happy with, I think, the data that we've shared so far going over this trade with everybody. I'm really glad that you were able to pass phase one. Congratulations again. For everybody that watched all the way through, make sure you guys click the link in the description and check out a webinar that Tom and I just did. It's called How to Think Like a Winning Trader. You can watch totally for free. You're going to learn some of the techniques and tactics that Tom and I have used to get funded and stay funded and really focus in on, I think, the psychological side of trading, which is sometimes not discussed, because a lot of what you've seen here today that Tom and I went over is psychological first and then brought to life here in this daily report card. The technical charts and stuff are just a very small piece of this. So make sure you guys check that out. I know you're going to love it. And Tom, I appreciate you as always for giving us the time. For everybody watching, make sure you connect with Tom. I'll put his links in the description. Any other closing thoughts, Tom, that you'd like to leave with the trade?
I suppose the one thing that I would say is just on the back of this trade is the biggest lesson of the day. So whilst my biggest lesson of the day was the fact that I wasn't actually around to watch this trade every single tick. I was off doing other things. I had to look after personal things during the trade. So having that time away from the desk to whilst this trade was playing out was probably something that I took away from this trade as well, instead of just sitting there watching every single tick or every single minute candle.
Right.
I definitely felt like my emotions weren't potentially getting the better of me in this trade as well. So definitely something to note moving forward as well. And for other people out there, maybe once you've got a trade on, just give it time to do its thing.
Yeah, I think that walking away then gives you the space to let it breathe, but then you want to be able to grow into managing it too, where you're just reacting to when it says, okay, it's changing direction, time to get out. But unless it says, like you said earlier, unless it gives you a reason to get out, you want to still be involved, mitigating risk and taking profit. But I think everybody kind of sees the way that you and I have been doing that, and hopefully they're starting to implement that into their own trading. So very good. Very good. All right, Tom, I appreciate you, brother. We'll do another one of these soon. Thank you, everybody, for watching. Make sure you subscribe, hit the thumbs up, drop a comment, let us know what you think, and we'll see you guys in the next video.